So in this video I'm going to explain what buying levels and EC valuations are, where my last look at AI stocks buying levels of late November 2020, some of the must-own AI stocks trading at very high valuations. For instance, Apple was trading on an EC of 76 against a target of 50, whilst Nvidia on 173 against a target of about 100, and whilst IBM was dirt cheap on -3. So at that time I could not resist buying more, where I'm sure several years from now many investors will be kicking themselves for not having had the foresight to pick up IBM when it was trading so cheaply. And next I picked up some more Google as the numero uno, and Facebook, given its continuing VR market success despite the dying mainstream media lobbying governments to get the tech giants to share ad revenues with them. And I also sought to pick up some Amazon on trading below $3,000, as well as looking to pick up some more AMD given its moderating valuation in response to unlimited demand for its CPUs, with Nvidia still a little pricey to prompt fresh buying, despite the success of its RTX 3000 series of GPUs that literally allows Nvidia to print money, sell as many GPU processors as it can produce, i.e. most Nvidia GPUs are made by third parties using their chips. And lastly there was TSM or TSMC that I was eager to buy despite not being exactly cheap on an EC of 46. Nevertheless, to gain exposure to another company that can literally print money, then one needs to bite the bullet and hit the buy button to gain some exposure to. So this series of AI stocks videos will seek to act as a major update to my AI stocks portfolio in terms of the reordering of the layout, as well as seeking to incorporate a number of higher risk, smaller cap tech stocks that I've been researching over the past couple of months. So remember that I consider sub $100 billion as small caps and not sub 1 billion stocks, which I consider high risk penny stock gambles to stay well clear of. Nevertheless, incorporating higher risk stocks at a low percentage of the portfolio for the long run should add some spice to the portfolio, where hopefully we can achieve some of the buying levels, else like TSMC be forced to bite the bullet and pay top dollar for a top stock. Firstly, what are buying levels? Buying levels are high probability technical levels that a stock could trade down to during a correction, i.e. it's an achievable technical chart level that could be used to, for instance, to put in a buy limit orders at just above the buying level if one is looking to accumulate more stock in any particular company, i.e. buying level for Google Alphabet was $13.95, so a limit order at above $30.95 would be the objective, depending on how eager one is to gain exposure to the stock, i.e. if I really wanted to buy more Google, then a limit order would be above $1,400, which it was last September, as stocks tend to find support at around round numbers. Stocks expensive or cheap indicator, the EC rating or level. This basically condenses down some 12 financial indicators I track for more stocks to determine if they are expensive or cheap, i.e. EC, expensive or cheap, as stock prices are usually not a good indicator of value. At its most basic level, the higher the number, the more expensive a stock is, and conversely, the lower the number, the cheaper a stock is, where the reading of between 20 and 60 tends to be the sweet spot for most AI stocks, as it implies earnings growth coupled with sustainable speculative interest, and thus results in good trending charts with support during corrections, where value tends to be fair so as to enable one to accumulate stock. Whilst readings above 60 increasingly indicate high levels of speculative interest in future earnings growth. However, this does not automatically mean that a stock trading over 60 should not be bought or sold. It just means that there's a lot of speculative interest in that stock, so expect greater price volatility as investors are more likely to react to news events. So I would still invest in stocks trading over 60 if they have a good reason to justify such speculative interest, i.e. such as AMD, Nvidia and Amazon of say 6 months ago that were set to greatly profit from COVID-19 lockdowns and the extreme demand for anything to do with processors, GPUs, CPUs and what like. Whilst a rating of over 100 is where stocks are becoming a bit too hot to handle, where holding, let alone buying, depends on understanding what's in the pipeline. What is it that's driving the stocks into the stratospheric valuations, such as where AMD was first killing Intel and now giving Nvidia a run for its money. Whilst there will be some, such as Amazon, I can't quite fathom the high valuations. Hence, I reduced my exposure to early September 2020. Whilst readings under 20 suggest little speculative interest, too little to drive stock prices significantly higher, so likely to expect trading ranges and thus tend to be what I call sleeping giants in the megatrend. Also could be signaling problems with the stock, such as Intel losing the CPU war to AMD, which has made Intel a disliked stock to hold, whilst AMD is being heavily built up into fever pitch, making it expensive, well, for much of 2020. And this video is an excerpt from my latest extensive analysis that concludes in AI stock buy ratings, buying levels and valuation analysis for 2021. That, of course, has first been made available to patrons who support my work. So, for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $3 per month. And you will have access to my other analysis already made available to patrons, such as my stock market trend forecast for 2021, US housing market trend forecast for 2021 into 2022, as well as access to my forthcoming analysis, which is high risk tech stocks, UK house prices trend forecast, Bitcoin price trend forecast, not forgetting my patrons got to buy Bitcoin at below $10,000. That's what my analysis concluded early 2020, around March, April. And then patrons only analysis on how to get rich and a technical analysis of the US dollar and British pound, all forthcoming analysis. So do consider becoming a patron by supporting my work for just $3 per month for that analysis, and do remember to subscribe to this YouTube channel for new videos, bearing in mind that there is a significant delay between what patrons get and what's posted on YouTube, usually a couple of months.